Hello, good morning. You are watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, a very good morning to you as well. A happy Monday is what we are hoping for after that long weekend that everyone got.
Yes, good morning to you, Vinny, and good morning to everyone. Let's quickly go through how the US markets performed on Friday. Of course, the US markets were shut. It was a truncated week on the back of Good Friday. However, there's a very important report that came out on Friday, the March jobs report that showed a resilient economy and a moderate inflation, which pushed the stock futures and the treasury yields higher. Now, the non-farm payrolls grew by 2,36,000 for the month, about in line with the Dow Jones estimate of 2,38,000. Now, the unemployment fell to 3.5% against the expectations that would hold from the previous month at 3.6%. Now, on the back of this, the futures tied with major averages opened slightly higher on Sunday evening, but currently, if you look at the stock futures, Dow Jones Industrial Average is up 0.09%, very flat, but in the green. S&P 500 is up 0.03%, again very flat, and the Nasdaq 100's future is down, was in the green, was hovering around the flat line, but is currently down 0.1% in trade as of now. Now, investors are, looking towards a really busy week of economic data that's likely to come out today, including the latest consumer price index and the producer price index data that's likely to come out on Wednesday and Thursday, respectively. Of course, that will pave the way for the rate hikes in the future, and of course that is also due in May, on the 3rd of May, at the FOMC meet. Coming to Europe now, European markets, of course, were also shut on Friday on the back of Good Friday. But if you look at the futures, DAX futures is up 0.8%, and Stock 600 is also up 0.9% in trade. So that's the global handover coming in. Vinny, tell us, where's the crude at?
Absolutely. Let's just talk about how crude has opened up this morning as well. When you look at the Brent crude oil, WTI crude oil prices, almost slight bit of a edging higher to a flattish move that is coming in for both these crude oil derivatives as well. Now, Asian markets also have opened up this morning. Mainly what is supporting the crude prices is mainly the tighter supply, the prospect of a tighter supply from the OPEC Plus producers from May is a factor that is keeping the crude oil prices a bit flattish to a slight bit of a positive bias is what we can see coming in over there. Brent crude oil prices are somewhere around and above that $85 per barrel mark, and WTI crude oil prices are around that $80, actually above that $80 per barrel mark as of now as well. Just a roundup of what happened last week in terms of the crude prices. Both WTI crude oil as well as Brent crude oil rose for the third straight week last week, so keeping an eye out on that. As of now, both WTI crude oil, Brent crude oil trading with some bit of a gains coming in over there. Gold futures continue to be about that $2,000 per mark ounce as well, so keeping an eye out on these commodities today.
All right, and let's quickly take you through the events that you need to keep an eye out for. Of course, in the corporate action, we have EID Perry that will hold a board meeting for issuing an interim dividend. And we also have SEPC's right issue that will open today. And we have Ajanta Pharma, whose buyback issue will close through via tender route as of today. The other events that we will be tracking are Amit Shah's visit to launch the new program in Arunachal Pradesh. We also have Indian Overseas Bank that will revise its savings account rates. We also have the nationwide drill in hospitals for the COVID preparedness, which was due on the 9th and the 10th of April, and today is the 10th, so we have that as well. And of course, the FM is going to embark on her US tour, and SpaceX Starship's first test flight will take off as of today.
Absolutely, Ankita, and let's just have a look at what are the other big news headlines that we have from the global markets. And like you were talking about, the US markets job data that actually continued to show some bit of a resilience with a 3.5% drop in the unemployment rate. The decrease is coming as labor force participation increased to its highest level since before the pandemic. Now, non-farm payroll rise was almost by around 236,000 jobs in the previous month versus Dow Jones estimate of 238,000.
And on the latest from the crude oil front, Russia's energy ministry has said that the nation reduced its oil output by about 7 lakh barrels a day last month, whereas government's pledge for reduction of 5 lakh barrels. Now, the figure is inconsistent with the data on March seaborne exports and supplies to domestic refineries, adding to the uncertainty over how much oil Russia actually pumps.
And Dr. Fisheraki, the founder and chairman of FGE, spoke to us exclusively and said that $100 on the crude is not far away. In fact, he says that we can see those levels as early as this year itself. He also says that the Russian oil supply has steadied the market a tad bit and there are no signs of visible for the OPEC to cut the output surprisingly. Listening to what the expert had to say.
We see the demand growth this year, 2.5 million barrels per day, of which maybe 1.5 million barrels per day is COVID recovery, and 1 million barrels per day based on the strength of the market. So very bullish on the demand side. So if OPEC is seeing something, we don't see it at this stage. It is possible that they've had difficulty finding customers in Asia, particularly in China and India, as they're buying so much Russian crude. So they say, okay, we see some weakness in, maybe not in demand, but in procurement and taking some action. I'm sure they have good reasons, but as of today, we can't see why they did it.
Dr. Fisheraki, there is a saying in global energy markets, an old saying that oil business is 1% business and 99% politics. How are you witnessing geopolitical, tension between some of the large geographies which consume a lot and produce a lot as well? For example, US has now become a net producer, net exporter of oil. How are those equations also playing a part in energy markets right now and these steps which are being taken?
Actually, I don't agree with the theory of 99% politics, 1% oil. I think that is 70, 80% of it is fundamentals, supply demand, and maybe 20% politics. So maybe that was true 20 years ago, but not today. US now is the largest producer of oil. And if you add crude and products together and condensate, the US is exporting more than Saudi Arabia. But US is also a huge consumer. And consumer means that most of the oil that they produce, they end up using it themselves. So they are different from Saudis, where they have extra oil that they export and they can control it. In the US, there are small producers, private producers. The government almost has no role in this matter at all. The government is just a bystander. So private companies run the show. But the geopolitics do impact things. At the moment, we see the Saudis and the Iranians reaching a diplomatic solution. We don't see any big geopolitical issues in front of us. In case of Russia, the price cap for Russia has failed. Russian oil still is flowing pretty much as before. And the Russians are basically replacing all of Europe with China and India and Turkey. And oil is still flowing at discounted prices, of course, but the flow of oil cannot be stopped by politics.
Moving on, regulators should take deep breath over crisis, says the JP Morgan Chase chief, Jamie Dimon. Only a handful of lenders have the problem that toppled the Silicon Valley Bank, he added. However, he warned that the recent turmoil probably made a recession in the US more likely.
Let's move on and talk about Tesla. Another American multinational automaker, Tesla announces a new mega factory in Shanghai. Now, the company is aiming to start construction during the third quarter of this year and the production around halfway through 2024. The automaker has gone ahead and slashed EV prices in the US for the fifth time since January in the move to spur the demand.
And French President Emmanuel Macron highlights the need for Europe to reduce dependency on the US. Also says it is important to steer clear of confrontation between China and US over Taiwan. Macron emphasized on his theory of strategic autonomy for Europe, presumably led by France to become a third superpower.
China sends over dozens of warplanes towards Taiwan in what was the second day of military drills, launching stimulated attacks in retaliation to the island nation's president. Taiwan's defense ministry said that it was monitoring the movement of China missile forces, and US too sounds an alarm, says it is on alert.
And US lawmakers meet Disney's Bob Iger and other high-profile tech and media executives to express concerns over China's censorship and Beijing's influence. The meet highlights the key role of tech and media industries play in America's increasingly complex relationship with China.
Okay, that was all the global news updates that we had for you this morning. On that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more domestic update, more stock news after this break.
All right, and that's quite a lineup on the market. But we did have Sandeep Tandon as well earlier on, who's the CIO of Quant Mutual Funds, who sees opportunity in banks, infra, capital goods, auto ancillary and power sectors. He also holds a sizable exposure in large cement companies. Listen in to what he had to say.
So, in terms of manufacturing, it's a very large thesis because we are talking about the way some of the global macros or the global economies are getting affected. So that generates a huge opportunity in India. So because manufacturing itself is a very large theme as a concept, so we like to capitalize on the individual components. Obviously, by default, banking is the first component which becomes very important, both private sector and public sector. That's one important theme. Then if you look at the infra themes, is also should do very well. This has been a big most neglected theme for last many years. The stocks opportunities are very limited. Yes, capital goods has moved up significantly and most of stocks are becoming relatively expensive. So I think it's an opportunity in the auto ancillaries, another opportunity one should look at. So capital goods, the large caps names have outperformed and they are expensive, but there are many such opportunities available in a small and mid cap if one to shut down and analyze. So auto ancillary, power, if I have to look at the infra in general, I think these are the larger themes, and this list is can be very large. So one has to spot the opportunity on individual names rather than saying one sector or one thesis which has played out. So if you really look at, if we are constructive on the infra, then cement by default become the first choice. So we are holding a very large exposure in some of the large cap companies, some of the mid cap companies also. So we are very constructive on the space. This quarter, in terms of volume growth, will be very good, may not be great in terms of margin. But if you look forward, let's say, talk about next 1 or 2 quarters, so going from the, let's say, FY24, financial year 24, I think it should be more constructive because we expect even margin expansion because energy prices has corrected a lot, so which will help them. Demand is anyway picking up. The only concern which we have, that extraordinary capacity announcement which has made by all the players that they will go to increase their capacity by 30%, 50%, 80%. That is something which is slightly scary at this point in time. But one has to look at whether it really get implemented or this is just an announcement, because to implement this side, it takes time. So from a near-term and medium-term perspective, we are very constructive, but too mature to talk about very long-term thesis given the extraordinary capacity which is being talked about.
Okay, and let's not forget earnings season is here. It just kicked off, and as earnings season is here, we do have updates coming in, and this one is from Tata Motors. It has shared an update on its JLR arm. The sales have risen in the fourth quarter on the back of improving semiconductor supplies. Now, for more details on this update on JLR by Tata Motors, let's go across to Shrishti, who's here to give us more details on that.
Well, yes, Tata Motors JLR has come up with their business update for the quarter gone by, and this time around a robust set being reported by the company, wherein the wholesale saw an uptick of 19% on a sequential basis for their JLR division, while the retail saw an uptick of 21% on a quarter-on-quarter basis. But the key highlight out of this press release is the free cash flow number, wherein this time around in Q4, the company is expected to report a free cash flow of over £800 million, pounds, and that's expected to be a positive number. And that if we compare with the Q3 number, which was just at 490 million pounds. So a substantial uptick coming in on this front. And not just that, when we talk about the full year projections on the free cash flow number, that is expected to be over 500 million pounds. So that's the key highlight. And on an assumption that the estimated cash balance as the year ends will be at 3.7 billion pounds with a net debt of around 3 billion pounds. When it comes to the numbers, then the wholesales has been recorded at 94,649 units, where in the geography wise, if you'll see, overseas, UK and Europe were the top 3 geographies that have performed substantially well on a YY basis. But in Q3, the company did mention about the concerns of the slowdown in their China sales, but this time around no specific mention has been there. But given the jump in the overall set of numbers, we are expecting that there must be some recovery. On the retail front, the company reported over 1 lakhs of unit that has been sold, wherein the Range Rover Sport and Defender has recorded a jump of 16 to 18% on a quarter-on-quarter basis. But lastly, if we talk about the order book number, this time around the order book has come down by 15,000 of units at 2 lakh of units is what the company has reported, and that's what we are seeing for the whole auto industry. With the improved chip shortage situation, the high order book number is now coming down as the companies cater to the pending demand into the system, and one such case is Tata Motors JLR right now. But overall, a great set of numbers being reported by the company, and the biggest highlight is free cash flow.
All right, and moving on from one automaker to another, India's largest car maker Maruti Suzuki eyes higher SUV market share this fiscal. And the company is looking to take up the leadership spot with as much as 25% market share. The automaker sold 2.02 lakh SUVs last financial year with a market share of around 13%. And in the current fiscal year, the company aims to sell around 5 lakh units. Now, the SUV segment is currently the fastest growing vertical in the domestic passenger vehicle industry, with competition tightening between players like Tata Motors, M&M and Hyundai.
Absolutely.
Welcome back. Here watching Market Café. Now, the Cabinet has approved the new pricing for the natural gas, most of which were recommended by the Kirit Parikh Committee. The floor price has been raised to $4 per MMBTU and the ceiling price recommended at $6.5 per MMBTU for gas from normal fields. Now, the Cabinet also announced that domestic natural gas prices will be revised on a monthly basis. Let's go across and listen into what the Union Minister Anurag Thakur said at the announcement.
जो निर्धारित हमने किया है कि एक फ्लोर प्राइस गैस का जो गैस प्राइस का है, एक फ्लोर और सीलिंग ये दोनों ही तय होंगी। फ्लोर को $4 रखा गया है और सीलिंग को $6.5 रखा गया है। इससे उपभोक्ता भी बचे रहेंगे और हमारी इंडस्ट्री भी बची रहेगी। अगर बहुत कम हो जाता है तो भी इंडस्ट्री को नुकसान होता है, ज़्यादा बढ़ जाता है तो उपभोक्ताओं को इसका नुकसान होता है, तो इससे दोनों की रक्षा की जाएगी। सीलिंग को पहले 2 वर्षों के लिए रखा गया है और ये प्राइस जैसे मैंने कहा प्रतिमाह घोषित हम लोग करेंगे। और इसमें हमारा प्रयास ये भी है कि डोमेस्टिक गैस प्रोडक्शन बढ़े, तो उस दिशा में भी पॉलिसी में 20% प्रीमियम उनको अतिरिक्त उत्पादन पर मिलेगा।
And to understand a bit more about these gas pricing norms, how will they impact the industry, let's go across to Somit, who's here to give us more details on that. Somit?
See, the most important announcement that has come in is firstly that earlier, if you see the gas prices, there were a very complicated formula that was there, and the prices used to change on a 6-month basis. But now the prices will change on a 1-month basis, and it will be very simple. It will be just 10% of the Indian crude basket prices for the last 1 month. So suppose in the last 1 month, Indian crude basket price was at around $80 per barrel, then the gas prices would be 10% of it, that is $8 per MMBTU, and these prices will be defined by by Petroleum Planning Commission on a time-to-time basis. However, the government has also come out with a floor price of $4 and a ceiling price of $6.5 per MMBTU, which means that if gas prices are above the $6.5 per MMBTU mark, then also they will remain at around 6.5. That's what the ceiling price means. Now, this ceiling would be maintained for the next 2 financial years, that is FY24 and FY25, and post this, the ceiling prices would increase by around $0.25 per MMBTU. Now, this is lower than what the Kirit Parikh committee had recommended of around $0.5. Now, this ceiling price and floor price will be applicable to ONGC and Oil India's nominated fields, but for other fields which are not on the nomination basis, the prices will depend on the 10% of the Indian crude basket prices. Also, the government has said that the gas prices produced from new wells would be at a premium of around 20% compared to the APM gas prices, and there is no changes on the formula used to determine the gas prices that are produced from the difficult fields, which means that the gas pricing for Reliance Industries would remain similar to what it was earlier. Now, what this means now for city gas distribution companies, the gas cost would come down to around $6.5 per MMBTU from $8.57 earlier, because most of their gas is procured from ONGC and Oil India. Now, this benefit of lower gas cost has been passed on to consumers, which means that the pricing economics of CNG and PNG over competing fuels like petrol, diesel and LPG improves, which means that CNG becomes more cheaper compared to petrol and diesel, while PNG becomes more cheaper compared to LPG, and this could lead to higher volume offtake and faster conversion of petrol car and diesel cars into CNG. Now, what does this mean for GAIL? Now, lower gas prices means that the profitability of the transmission and the LPG business would improve, and according to analysts, every $1 per MMBTU reduction in gas prices lifts GAIL's EPS by around 1.5 to 2%. Now, for ONGC and Oil India, over long term, these moves are positive, but for short term, if you see, there could be some negative impact because the gas pricing for them is coming down from $8.57 to $6.5, and according to analysts, every $1 per MMBTU cut in gas prices impacts ONGC's EPS by around 8.7% and that of Oil India by around 11.5%. However, the government has made sure that the gas business still remains profitable because the floor price of $4 is way above the cost of production, which ranges around $3 to $3.5 by MMBTU for ONGC and Oil India.
All right, thank you for those details, Somit, and we'll stay with that. And we also spoke to Kirit Parikh to understand what would be the impact of the new pricing for final consumers as of today. Listen in to what he had to say.
See, the one is to recognize that currently large amount of LPG is imported. So if the LPG price goes up, then the consumers have to pay a higher price. Now, what we have done, the consumer price would remain lower than that LPG price. CNG price would be less than that. So if you, for example, if you are cooking with LPG cylinders and if you change over to piped natural gas, you will find that your monthly bill is lower than what it was otherwise earlier with LPG. And the same way would be applied to the CNG users' vehicles. If, for example, even if you are driving a diesel vehicle with a Bharat Standard 6 emission controls, BS6 emission controls, your emissions of CO2 and particulates both would be higher than that of a vehicle which is using compressed natural gas. So it is a desirable use because it will reduce urban air pollution or indoor air pollution in kitchens. And that's why I think in both the cases, the price range is such that it will always be less than the competing fuels that are available.
Okay, let's move on and also talk about Adani Total Gas and Mahanagar Gas. Why is that so? Because they have reduced CNG and PNG prices. Now, CNG prices are slashed by up to rupees 8 per kg and PNG prices by rupees 5. The new prices will be effective from today. Prakash is joining in with us with more details on that.
Done for the companies to provide relief to the consumer when it comes to bring down retail prices of CNG and PNG. And they rightly started the reduction in prices. Firstly, it was MGL, which has decided to reduce retail prices of CNG by rupees 8 per kg and domestic PNG by rupees 5 per unit. Then Adani Total, It has also decided to make a reduction in retail prices with almost similar number effective today. It is expected that other city gas distribution companies, including IGL, will also reduce prices later today or tomorrow. Prices of CNG and PNG are, being reduced on back of decision by the Union Cabinet to adopt a new pricing formula for APM gas. Remember, as per the Cabinet decision, prices of APM gas has been linked with 10% of the crude basket prices, and the Cabinet has also accepted the recommendation to have a ceiling at rupees $6.5 per MMBTU and floor price at $4 per MMBTU as far as the APM gas is concerned, which means prices of APM gas was reduced to $6.5 per MMBTU from earlier $8.57 per MMBTU. So there is a net reduction of almost $2 per MMBTU. Petroleum Ministry has notified new formula yesterday, followed by cabinet decision, and reduction in prices are being passed on to the consumers now. So it's a big relief, and as per revised guidelines, prices will be revised on monthly basis now, which means prices of APM gas will now be revised on 30th April. It's a big decision, and after 9 years, the overall guidelines of APM gas prices have been changed. A relief is being provided to the consumers.
And well, moving on, India is lucky for a pause in rising interest rate cycle, says HDFC's Deepak Parekh. Speaking at an event in Mumbai, Parekh said that the conducive startup environment enabled exploding of entrepreneurial in India. Now, he also said that the businesses believing in a corporate governance will succeed in the long run, and short-term thinking is often the cause of downfall. He further adds that India is not immune to global shocks but has shown more resilience compared to larger economies. He also believes that days of high valuations, cash burns are behind us.
Let's move on and talk about Reliance consumer product, and that is in advanced talks with the leading Chennai-based Bovonto soft drinks maker, that is Kali Aerated Water Works, for a manufacturing distribution partnership. Now, this is to make and sell Reliance's Campa soft drink range. Reliance had held discussions to acquire a majority stake in Kali Aerated Water Works before it bought Campa in August last year. Bovonto is one of the largest cola brands in the southern markets and competes aggressively with multinational brands like Coke and Pepsi. Kali Aerated, which also makes lemon, orange and ginger ale fizzy drinks, has more than 8 plants in the southern India. The deal, which is in advanced stages of closing, will give Reliance immediate advantage of Bovonto's manufacturing lines, as well as the strong distribution outreach and the competitive edge as well.
And well, Sandeep Tandon, who's the CIO of Quant Mutual Fund, has started buying into select pharma names. He prefers pharma companies to hospital companies. Listen in to what he had to say.
It's a interesting point which you have brought, because we have also seen now pharma sector is now trading in that neglected zone which we generally look forward. Okay, so we exited from September 2020 from pharma. We have been adding some of the pharma names. Okay, so it's not very decisive right now, because in terms of earning potential, it might take a quarter or two more. But if I have to look from a behavior perspective, as we generally look forward, stocks are trading in the neglected zone for wine, or I'll say some of the stock has reached the most hated zone also. Okay, people don't want to even touch pharma names. Rather, majority of the fund houses are actually exiting because they have been holding for these names for a while. So their patience is getting tested. So I think it's a good opportunity, but one has to be very stock specific there, because it's not that we are able to take that call as the sector has reached a bottom and then one should be. I think bottom fishing should be done on some of the individual names, and particularly those names which has been in neglected or beaten down and something is, or some trigger are expected. Those are the names which we are looking at. We are constructive on the hospital space, but only thing is that we have to look at the valuation. Some of the valuations still very, very stretched. Even some of the diagnostic companies, they have corrected a lot from the higher levels, but they are still not that attractive. So I will selectively, one can participate in the hospital space also, but I'm more constructive on the pharmaceutical, the formulation companies or the APIs company or the CAMS. So more focus on the pharma companies rather than the hospitality areas.
Okay, let's move on. And earnings season, we've spoken about Tata Motors update, but we also had Titan and Adani Wilmar report their Q4 updates coming in. First, let me take you all through how the jewelry maker has actually reported in terms of Q4. What are we expecting in terms of Q4? Do not forget, around 80% of Titan's revenue comes in from the jewelry segment. So yes, what we're seeing is a decent revenue growth is expected to be seen in Q4 from the jewelry segment. Around a 23% growth on a year-on-year basis from the jewelry segment. So decent growth for the jewelry segment on a low basis. Now, a strong growth is also seen in other non-jewelry business. So that is the eye care business as well as the watches business as well. Now, watches business, we are expecting a segment revenue growth of around 41%, while eye care is around a 22% growth as well. Now, obviously, what is going to be a key highlight that we'll be watching out for in terms of the demand in the light of these high gold prices? How is that going to be shaping up? The company also mentioned a bit about some softness in demand in the month of March as well. Other than that, yes, what they're saying is that watches sales was mainly aided by the watch segment growth, that overall good growth that what they've seen there, as well as the emerging business for the company also registered an 82% growth. So overall revenue growth was mainly aided by watches as well as the emerging businesses. Healthy progress was also seen in the retail store expansion for Titan. So yes, keeping an eye out on Titan. A decent update as of now is what we can see coming in over there. Let's move on and talk about the FMCG major Adani Wilmar. Now, on a standalone basis, Q4 volume growth is expected in the high teens on a year-on-year basis. Edible oil volume growth, on the other hand, has remained flattish. Food and FMCG business volume growth is seeing a growth, strong double-digit growth of 40+% growth over there as well. While in terms of the industrial essentials, that has also seen a good growth of 60%. Growth story with year-on-year basis volume growth of around 14% in FY23 versus FY22, and they've crossed the 55,000 mark in terms of the revenue for this year. Supplies for imported edible oils were also smoother, is what the company has highlighted. Let's keep an eye out on this one. The company's growth story has been strong, is what they are highlighting. Will be important to see how they actually shape up in terms of that. Edible oil, the segment branded sales volume grew by around 4%, is what the company is highlighting, and decent number also coming in from Adani Wilmar.
All right, then moving on, the realty player Shobha has come out with its Q4 updates, and the company has achieved its highest ever quarterly sales value in Q4 as well as the highest ever annual sales in FY23. We have Vamakshi in the studio for all the Q4 updates. Vamakshi, tell us what are the details.
Well, absolutely. A very good morning to all of you all. Well, Sobha came out with a very strong operational update as far as Q4 is concerned. Now, overall, like you rightly pointed out, we're seeing that the company has in fact achieved its highest ever annual sales of 5,198 crores, which is an uptick of nearly 34.3% on a year-on-year basis. And not just on an annual basis, but when we look at the quarterly sales, they have also achieved the highest ever quarterly sales with a value of nearly 1,463 crores, up nearly 2.7% sequentially, but more importantly, up nearly 32% on a year-on-year basis. When we look at the average price realization in the fourth quarter, that has improved by nearly 19.8% on a year-on-year basis to 9,898 per square feet. In fact, average price realization for the entire year FY23 was up by nearly 16.7% when we compare it to FY22. Now, Bangalore sales volume was up 4.4% in Q4 and in fact contributed nearly 63% to the overall area sold. The company did launch 3 residential projects in the quarter gone by, but 2 of those projects are in Bangalore, with the third project in Hyderabad. And in fact, it is important to know that with this, the company has forayed into the Hyderabad market in the fourth quarter. This is in fact their first project in Hyderabad called Sobha Waterfront. So overall, a strong operational update coming in from Sobha.
Okay, Vamakshi, thank you so much for that. And Ashesha, coming to you, very good morning to you, and good morning to you as well, Vamakshi. But Ashesha, what are the stocks that we should be keeping an eye out on? What's going to be buzzing today?
Yes, let's keep it with the operational updates then. And Credit Access Grameen will be the first one in focus, and this will be on the back of operational updates that the company has reported. AUM at the quarter gone by stood at 21,000 crores, which is an uptick of about 18% on a sequential basis. As far as disbursements are concerned, that for the quarter gone by stood at about 7,100 crores, an uptick uptick of 48% on a sequential basis and 24% on a YOY basis. Meanwhile, Century Textiles and Sudarshan Chemical will also be in focus, and that is because Birla Estates, which is a wholly owned subsidiary of Century Textiles, has forayed into the residential real estate market in the Pune region. They have acquired 5.76-acre land parcel in the central business district from Sudarshan Chemical. This has a development potential of about 1.5 million square feet and revenue potential of about 2,500 crores. On account of this deal that has happened, both Century Textiles and Sudarshan Chemical will be in focus in today's trading session. Also keep an eye out on RVNL, and that is on the back of an order win. The company has informed the exchanges that they've emerged as L1 bidder for a project which cost about 378 odd crores. This is in consortium with Siemens, and RVNL has about 40% share in this particular joint venture. Also keep an eye out on Alchem Laboratories, and that is because they've received Form 483 with 0 observations for their Ankleshwar facility. Shyam Metallics will also be in focus yet again on the back of their operational updates, where sponge iron sales have seen an uptick of about 15% on a quarter-on-quarter basis, while long steel sales have seen an uptick of about 8% on a sequential basis. Lastly, also keep an eye out on Muthoot Finance. The company has gone ahead and declared a dividend. Management commentary, meanwhile, is quite optimistic. They say they are witnessing improved business environment and improved collections, and there's still huge untapped potential in the gold loan sector. So dividend and positive commentary is why Muthoot Finance will also be in focus today.
All right, Ashesha, we will keep an eye out on all those stocks. And we also have Vamakshi, who has been reading all the brokerage notes that came in this morning. Tell us, Vamakshi, what are the stocks that these brokerages are recommending?
Well, absolutely. So the first stock on our radar is Tata Motors. We have a note that has come in from Goldman Sachs. Now what they're highlighting is that they're seeing the volume outlook for Jaguar Land Rover improving, and this is quite important because it contributes nearly 70% of Tata Motors' top line. Market, in their opinion, is seen underestimating JLR's EBIT margin potential, and on the back of all those factors, they've actually lifted their FY24 as well as 25 EBITDA estimates by nearly 15 and 16% respectively. So given all those factors, Goldman Sachs has in fact gone ahead and upgraded its rating from neutral to buy. In fact, the target price for Tata Motors is at 550 per share. The next one on our radar is Bandhan Bank. Goldman Sachs has come out with a report, and they believe that the bank is finally nearing its earnings cut cycle. They also believe that the bank is likely to inflect into a higher ROA as well as ROE bank over FY24 and 25. Collection efficiency for the bank has also improved at 98.5% in March 23, and in fact, on the back of all these positive factors, they've upgraded Bandhan Bank to buy from neutral given a target price, and in fact they're expecting a 31% upside potential from here on. Now on the other hand, we also have other banks in focus. Goldman Sachs believes that NIM's headwinds are quite manageable. Many levers are in place to manage profitability this time around. They expect that the margins in FY24 should be stronger than the pre-COVID period, and the credit growth is the slowdown that is seen over there. The cycle is quite cyclical in nature. Now, on the back of that, Goldman Sachs has Kotak Bank as well as SBI on the conviction list with a buy rating, while ICICI Bank is off the conviction list.
Okay, Vamakshi, thank you so much for that. But Ashesha, I'm going to come back to you because we have a channel check that is coming in on the cement space as well. What is it suggesting this time around? Any meaningful price hikes that are there, or no price hikes? What is
Well, yes. So Investec has come out with a report after conducting channel checks on the cement sector. First up, they talk about price hikes. They say that although we have seen a lot of announcements come in with respect to price hikes, these announcements have not actually translated into price hikes, and we have not seen any meaningful price hikes that have come in so far in the month of April. As far as the northern region is concerned, they say Delhi, Chandigarh and Jaipur witnessed no change in pricing in the first week of April. However, there is an announcement from mills for about 15 rupees per kg price hike in the region. As far as the southern region is concerned, they say Hyderabad is the only place in south where cement mills have raised prices by about 30 rupees per bag. In the rest of southern region, except Karnataka, there is an announcement of increasing prices by about 30 to 50 rupees per bag, but this has actually not gone through. As far as the eastern region is concerned, we have not seen any price hikes as yet. However, there is an announcement to increase prices by about 10 to 30 rupees per bag. Moving on to the central region then, Over here as well, we have not seen any price hikes come through so far in the month of April, but there is an announcement to increase prices by about 10 rupees per kg per bag. So the moot point being, although we have seen a lot of announcements come through from several mills across India, we have not seen actual price hikes come through so far in the month of April.
All right, thank you for that, Ashesha. And with that, it's time for us to quickly slip into a short break. Don't go anywhere. There's lots more coming up on the other side.
Welcome back, and you're watching Market Cafe on ET Now. Moving on to an ET Now exclusive, we have learned from reliable sources that private equity firm Temasek is looking to hike its stake in Manipal Health. My colleague Anurag Joshi is joining in with us to give us more details on that. Anurag?
Singapore state investment firm Temasek is in very advanced stages to increase its holding in Manipal Health Enterprises to a controlling 51% equity stake in the company. Sources told ET Now that Temasek, which currently holds 18% equity in the company, is likely to complete the transaction by the end of the month to increase its stake by an additional 33% by buying out the stakes of the founders and two other key investors in the company. The Economic Times had earlier reported that Temasek was in discussions with the Pai family to buy a 15% equity stake from them, 10% of the equity stake held by TPG, and the entire 8% held by the National Infrastructure Investment Fund. If the deal goes through, the Pai family's stake, which is currently at 52%, is likely to fall to about 37% in the company. Now, Manipal Health operates 29 hospitals in 16 cities in India.
And KPMG LLP was sued as SVB's auditor along with underwriters including Goldman Sachs, Bank of America, Morgan Stanley in an investor lawsuit based on alleged misstatements leading to the bank's collapse. According to the lawsuit, the defendants misrepresented the strength of the company's balance sheet, liquidity position in the market. And Finance Minister Nirmala Sitharaman is in the United States for the week-long official visit. During her stay, Sitharaman will be attending the 2023 spring meetings of the World Bank and the International Monetary Fund, along with G20 meetings, investors, bilateral meetings, and other associated meetings. And the Meghalaya CM Konark Sangma, heading the group of ministries, may recommend the highest 28% GST on betting, casinos and horse racing, differentiating between games of skill and games of chance. Now, the GOM is also expected to freeze its recommendations only after the introduction of the IT Intermediary Amendment Rules 2023, and the final decision will be taken by the GST Council in its next meeting, that's likely in May last week or June first week.
Let's move on and talk about IPL. The opening match of the Indian Premier League featured 40% fewer advertisers on TV compared with the previous edition. This is according to the data from the Broadcast Advanced Research Council. Remember, the inaugural match of last year's IPL featured 52 advertisers on TV. Moving on, and more update on IPL, we have Kolkata Knight Riders snatched the victory from the jaws of defeat against Gujarat Titans, chasing a mammoth 205. Now, KKR were down and out with just 1 over to go, needing 29 runs in the final 6 balls. But Rinku Singh made an impossible possible by hitting 5 sixes in the last over. And least for the people have died, and 4 people have died and 9 others have been injured in an avalanche in southwest Mont Blanc in the French Alps. Now, the 4 caught in the avalanche were skiing in the mountains. The local deputy mayor has confirmed that the 2 of the dead were mountain guides, and several injured have been taken to the hospital, and 2 people are still missing.
And well, it's time to wind down on this one. Thank you so much for tuning in. Don't go anywhere. The markets will take the action forward.